Hey, welcome back to Two Super Guys Red Sox. I'm Dylan.
And I'm Vinny, and we're talking about Alibaba earnings today. Something that Dylan and I both own this stock. Our patron saint of this channel, Michael Burry, does as well. We're going to talk about the most recent quarterly earnings and kind of update what my trading strategy around this stock will be for the next few months. So get to it.
Hmm.
Yeah, I know, right? Uh, what do you think after this chart? Do you think the market really had a good reaction to it? Because it's right here. This is before market, so this is the reaction to the earnings report.
Well, we kind of knew it wasn't going to be great because what JD was first, right? And
Yep.
they did not like it. So
Nope.
I didn't even check
Yeah.
my account. I still haven't. I'm like, yeah, it's not going to go well.
It's fair. That's probably reasonable. That's good. Good for you. 8% in a week that they ended up closing down. So, a little brutal. Plus, we've kind of cooled off from the expectations of the initial stimulus announcement. So, this is what the headline from CNBC was. That they beat on the profit mostly because of like market accounting rules on their other equity stakes. So, net income rose by 58%. Do I really care about net income? Personally, no. Other people in this channel have mentioned it that almost buying Alibaba is buying a retail business at a relatively low multiple, and also getting a little bit of a China ETF because of all the other equity holdings that they have. I get that idea. I can't value that. All right, so
Right.
I kind of ignore that part of their business. The revenue of the core business up 5%, which is good considering that they had basically no growth for a while. They're starting to get at least low single digits, low to mid single digits, which is something. But the report is kind of mixed, and that was my feelings after listening to this entire earnings report or reading through the entire earnings report and listening to their conference call. So these are their prepared slide deck. Basically, the CMR revenue was up 2% on for their kind of, so CMR is their it's a customer management revenue. That was the higher margin part of the business. Remember, we wanted direct sales to not be such a large portion. Direct sales was actually like down 5%. The CMR revenue was up. They did change how they're actually charging their customers. They got rid of like an annual fee, and they are now charging like a 0.6% on completed purchase fee,
Hmm.
um, to be more in line with other Chinese retailers. Which, okay, fine. This is definitely a pivotal quarter as far as that goes. I think they said it started September, so it's like a month of that was in this quarter, and that'll be the way that they're charging their customers going forward. So
Okay.
interesting.
All right.
Yeah, cloud up 7%. I mean, we were promised that we would eventually be getting to like double digit
Double
territory, and
digit.
it's been making this progress on the way there.
Uh,
The yeah, in
uh,
particular, this right here, AI related product revenue grew at triple digits for the fifth consecutive quarter. When you're starting at $1, it's very easy to grow triple
yeah.
digits for a while.
I was going to say, so $2 or $4, 100% increase.
Yeah,
Dope.
yeah, yeah. Notice they didn't actually say a specific amount of revenue.
Yeah, that's how they get you.
Just
It went up
yeah,
200%. Don't look at the base number.
yeah, exactly. But still positive direction, which is good. All right, we'll take what we can get. And their net cash position, I want to highlight this down here: 50 billion positive net cash. Still sitting on a nice cash pile. I'll talk about a little bit later about what they're doing with this cash pile, though. All right. So slide number 2 in their deck goes right into share repurchases, because that's one of the things that they're doing with this cash pile here,
Yes.
is trying to buy back shares, chew them up. We get the updates from them immediately after the quarter closes, so it's something we've kind of already talked about. But they're continuing to employ cash. They do have a limit imposed by the CCP that they can only buy back 10% per year. I think what they said they're at already for the first 6 months because they're in calendar year or fiscal year 2025. I think it was like 4.4% they announced. It might be even up here, but somewhere in that ballpark.
Okay.
It's 2% in the most recent quarter, which is cool. On every 100 shares you own, that's another 2 additional shares in essence of equity ownership you have here at Alibaba, which is definitely nice to see. Income from operations. Okay, what I wanted to highlight here is when we're looking at the individual like segments, what are we doing as far as like profitability here? All right, so the income from operations only up 5% year over year, so roughly in line with revenue, which is good. They're not discounting things to such a significant kind of standpoint that they're not taking in more revenue and not getting it all the way down to the bottom line, which is something like to see, because I care less about like the top line, where they're talking about net income here, 63, 58%. Yeah, these are much bigger numbers, but that really is relying on their investment income, which is
Yeah,
up
completely.
260%.
Yes.
So that's the ETF portion of this company, if you want
Right.
to think about it that way. All right, the cash flow. So I like to look at cash flow because that's what really matters to me. And as far as Alibaba's cash flow, things are starting to continuing to trend in a direction that is makes me cautious. All right. The
Oh,
most recent quarter, this is what their free cash flow was, just under $2 billion. Okay, U.S. dollars. This column's U.S. dollars. They do still have this positive net cash position of 50 billion U.S. dollars. Right, but this is not as large as they used to be. Right? So in comparison, we're looking at look back here. Well, this is 6 months, $4.4 billion. Right,
okay.
so not the right direction as far as that goes.
Eesh.
As, as far as where the percentage of their kind of revenue is going, they are spending a little bit more money in sales and marketing. Now they've talked a lot about getting customers into their ecosystem and retaining them. They're investing more in that customer kind of experience, which in the long run makes sense, right? You want to have people coming back to your platform frequently and making more and more purchases and relying on you for a larger and larger portion of their spending. So I'm not I'm not really angry about that or like disappointed in that. I just want to make sure that it's being used prudently. And that's kind of something you really get from the conference call. We'll talk about my conference call notes here in a minute.
Got it.
All right. Now on a segment by segment basis here. All right. So now we're looking at this chart right here is actually the revenue. As far as Taobao Tmall, like I said, I'm sorry, the EBITDA down 5%. All right.
Okay.
Despite
Not
the
great.
revenue being up 1%. All right.
Not ideal.
Yeah, exactly. The cloud infrastructure revenue up 7%, which we already talked about. EBITDA for that segment up 89%, which is good. Fantastic. I love that.
Finally,
There.
something in that because
Yeah,
that's been
especially
a
when,
very low performance for like 3 years. So
yes.
I'll take it.
Still remember all the way back to the days where they showed this ridiculous CAGR that they were expecting over the next like 5 years,
Yeah.
and they've come nowhere even remotely close to
Not
that.
even 10%.
Uh,
Yeah.
Yeah. So one of the nice things though is look, cloud is actually almost now their second biggest, largest segment by revenue, and as far as being actually a profitable segment or EBITDA positive, it's certainly much closer than the other larger ones, I guess, other than the classic T-ball, Taobao,
Let's
T-ball.
get to that
Uh,
scary number that's after the cloud intelligence group.
the negative 657%.
That one. Yeah.
Yeah, yeah, so that's the international segment. This is a large area of investment for them, for sure.
Right.
They're trying to expand outside of China significantly, particularly like Middle East. I think that's a lot of portion of where their advertising money is going as well. They give you a segment by segment breakdown here. Most of this is not really even worth reading, but they started their 11/11 sale earlier. They do have, I think, now 46 million people that are part of their VIP program, which is good. That's like consider like Amazon Prime.
Yeah.
These are people that are coming back to the platform more and more, and it's continuing to grow, very solid pace. I already kind of talked about the highlights here as far as like the CMV revenue was up 2%, but then direct sales was down 5%. Particularly, they said that with appliances. Yeah, right here. That they are now. I guess I see that for the conference call. The cloud intelligence one, I already kind of mentioned this as far as the 7% growth in revenue, and that they're having significant growth within their um, AI related revenue in particular. Right. All right, I really want to kind of just get through these, then we'll talk about everything else in the conference call section. Uh, International, although extremely negative, did have 29% growth, which is phenomenal growth, but they're doing it at the expense of like actually losing money.
So
So,
I'm
how
okay with
long is it going
that.
to take for them to? What's that?
I'm okay with that because it's the most logical thing to do when you're sitting on 50 billion in cash is try to expand your audience. You're gonna have to spend a lot of money to make a lot of money. That's also gonna hurt their cash flow, which I know that you don't
Hmm.
like, but
Yeah,
it could be a huge payoff because if they're
it
expanding to the
could.
Middle East and all that stuff. Now, granted, I bought something from Alibaba. I will never do that again. But different experience. We're very far away. It's it could be huge 5 years from now. So
Absolutely. It is definitely a long-term investment area for them. Um, and they're continuing to kind of develop that region. The logistics network, 8% growth, nothing super crazy there. But still, positive direction, better than their core business as far as growth, which is something. But it's not this, going to be a huge future revenue generator, I don't think, for them. This is an area that they thought about IPOing individually a while back. I don't
Right.
know if it's something they'll put back on the table if the Chinese stock market recovers significantly, but maybe. And
Right.
finally, the local consumer services, another area that had pretty solid growth here at 14%. But none of these like really move the needle for them. Really, Alibaba to me is a retailer, and then also like the cloud infrastructure, right?
We hope. We hope the cloud. We hope eventually
We
the
hope the
cloud
cloud.
is like 40% of the business,
Yeah,
like Amazon Web
exactly.
Services.
Yeah. So this is what we're looking at as far as conference call notes. This is where I really want to get to like the meat and potatoes of like what's going on and where are they going next. So investing heavily in cloud. They have cut their free cash flow per quarter in like half. It used to be over 4 billion. Now it's down to like 2 billion. And they're saying that because it's majority of it's going to cloud infrastructure. Now, someone towards the end of the conference call finally asked about, are you getting a positive return on investment in this? And they were like, yes. They didn't give a number, which is kind of, I was disappointed. I really would have liked to have seen a little bit more like detail and like, kind of something more measurable. But they did say that they have explosive demand within AI to the point where they cannot meet current demand. All right. And that's why they're investing so heavily right now in cloud infrastructure. And they think it's going to continue
That's
for
great.
quite a while.
Yeah.
Yeah. Yeah,
You know who else
exactly.
did that?
Who's
Mark
that?
Zuckerberg. When Meta was $130 a share, he got a bunch of
Yeah.
shit for it. It went down to
Uh-huh.
80, and now he started laughing. So
Yep.
yeah, I'm okay if you're net positive 4 billion. It's different if you're barely breaking even and you're a growth company and then you're also
Mhm.
spending a bunch of money. But if you're making cat, I mean, this seems like the smartest thing to spend your money on, to be this or share buybacks, and they're doing both. So
Yes, and they're limited on the buybacks a little bit. Now, as far as like their kind of plans as far as generative AI, they are definitely investing heavily in that area. Hopefully, they are correct in that there is this demand, and they're going to continue to be able to like sell everything that they're putting through. And when we compare to Meta, would really give you data on that. They didn't give me like a number. They just said like, yeah, that there's explosive demand, and we can't keep up with the demand right now, which
that's true.
is a great position to be in. But I would like to have seen them actually definitively say like, and we're able to get these metrics where we're seeing, Meta would tell you like, oh, we have better ad click through rates by like 80% by employing this AI tool. They didn't give us anything like that.
Okay,
Now,
fair.
the big talk about stimulus, all right, over the last couple months, they said that they are seeing effects from stimulus. Mind you, like this quarter closed September 30th, and the stimulus measures were starting to be announced at the end of September. So in the categories, because there's like a buyback program that they have available in certain areas, China's very interesting and like it's very local government driven. But there's exchange programs for different appliances and things like that, and they are starting to see positive effects of that through their business lines. But they didn't give us a number on that once again, which is something that I would have liked to have seen. But they are hopeful and optimistic that this is just the beginning of like the stimulus measures. I think based on geopolitics, right, we're not going to really see a whole lot in terms of what's going to happen with the Chinese stimulus until after Donald Trump takes office in January.
Right.
Yeah, because it's going to be they're saving their dry powder for response to whatever the U.S. government does. So I'm not surprised that we haven't seen anything super tremendous announced by them yet. But it's something that could be really meaningful for Alibaba. But we were looking at like later on January before anything like that happens. Now, this is another thing that always makes me a little cautious when I hear stuff like this is that they stated that EBITDA will fluctuate for the next several quarters due to Alibaba being in an investment phase, right? So they're really trying to, like I said, half of their free cash flow from the previous quarters is now going into building, server farms for their AI infrastructure. So you have to really believe in that long-term vision in order to continue being an Alibaba shareholder. So that's like a major decision point for you at this point, especially now we're
Well,
back into the 80s, right?
as a gentleman with a lot of baba and two stupid guys trade stocks, do you believe in that viewpoint?
Maybe,
Oh, you
maybe.
know what? Here, I'm
I'm
sorry. I'm gonna let you get to your next slide and then answer that question.
exactly. All right,
Yeah, sorry.
that was my plan. And then one other thing that they did, I want to mention. This actually was one of my theories. They were wondering like why they had so much cash, but they were raising debt back in May. They did finally confirm that it was for share buyback purposes. Now the Chinese government limits them to 10% like repurchase of shares. There has been additional authorization as part of these stimulus measures to allow companies to buy back more shares. However, they were asked about this in the conference call, and they said that it doesn't actually apply to them right now. They've looked into it, but it's not something that they can do at this point. But they would be interested in borrowing more money in non RMB like currencies order to execute more buybacks. So it's interesting. I'm not sure if they do it through like the shell company, because right, Alibaba is actually truly a Cayman Islands holding company, and how they organize the ability to do buybacks in excess of what they're allowed by the CCP. So I'm not really sure on the moving parts of that.
Got it.
All right, now this is like the crux here, right?
This is a
So
shot to
free cash
Vinny's
flow
heart.
yield, yeah, right in my heart. This is the market cap as of closing on Friday, 212 billion. They still have 50.2 billion in actually a positive net cash here. Their trailing 12 month free cash flow is down to 14.5 billion. Okay, and almost 8 billion of that was in the fourth quarter of last year. So that's about to fall off in like the next quarterly earnings. Right. So their current free cash flow yield, trailing 12 month free cash flow yield, is a little under 9%. And remember, this is a company that at one point was like 23, 25%. So you really have to believe in management's vision here for cloud growth.
Okay.
Right.
Now, so you're saying once that fourth quarter falls off, and assuming we have the same number as we did this quarter, 2.5 billion, we'll be at 5.5%, which is,
Yeah.
That's your Apple, your Google,
Yeah.
your American tech companies.
Google. Yeah. Yeah. So that free cash flow premium that we were receiving for Chinese equities and holding them will have effectively evaporated at that point. Going from that 20% down to like 5%. And I said 2.5 billion is actually above what they've been doing the last few quarters. I gave them a little bit of an extra boost there. It's definitely scary. I will tell you that as far as my trading plan, this is my thoughts. I'm going to continue to hold Alibaba stock. I am going to start selling covered calls against it though, until I get to like mid-January, unless Donald Trump and like the incoming administration announces definitively what tariffs they plan to put in place. I am going to continue doing that because I don't see Alibaba having a tremendous rally over the next few months. Before we get into like the point where we're getting actual definitive government stimulus after the change of government here in the United States, and the kind of what we see what shakes out in terms of sanctions or tariffs. Tariffs is the correct word, but effectively the same, similar thought process there.
So here's my question. Here's where I think this free cash flow yield model falls apart. They could just not invest a lot of cash in cloud infrastructure and artificially increase that number. Not artificially, that's the wrong word. Just actually increase that number and just sit on cash.
Yeah.
Would you rather have the
absolutely
company
could.
that's doing that and has a higher free cash flow yield number, or
It's a great debate,
investing on the future?
That's something that's kept me from investing in Amazon for a long time, right? Because Amazon has always been reinvesting internally at such a high clip that they've never had significant cash accumulation, as far as like they've never been an absolute money printing machine like other companies like you see Apple has been for quite a while now.
Well, hold on. They are a money printing machine. They just spend all of it on
Yeah,
other things.
yeah. Exactly. So, well, you have to look at like things like a return on invested capital to make sure that they are investing internally. Because when you look at the hierarchy of what companies can do with profits, investing internally is like the best, right? Because they're not getting taxed on that money,
right.
As far as like having to do buybacks or pay out dividends. But they're able to, if they're able to reinvest here, they can earn above market kind of return rates. So sometimes you see companies being able to reinvest internally at 15%. Which in theory, like your money is being reinvested at that 15%. So you're actually earning above market rate of return. It's just less tangible. It's a little harder to get there. And you have to have a little bit more faith in management. Now, this management, I do actually have more faith in them than anything we've seen over the last few years of Alibaba. They seem to have a shareholder like first mentality, and that they really are trying to, appropriately turn the ship around a little bit here at Alibaba and make it a much more profitable, efficient company that will return money to shareholders. I will give them the benefit of the doubt for a while, which is why I'm not like, oh, panic, this number is too low now, I'm just going to sell. But I am going to start selling covered calls because I think there's a little bit of a cap now on Alibaba stock until we get into another round of government stimulus, which I don't think we're going to see like the real brunt of it, like I said, until after Donald Trump takes office.
Got it. Covered calls in Baba is terrifying to me. All right, guys. Let us know what you think. If we, buy more, stay, sell. I don't know. We'll see.
Yeah, covered calls.
Later, guys.
Catch you later.